After the panic collapse of the World Stock Exchange on Monday, markets rebounded this Tuesday. World stocks, oil prices, bond yields all went up after China cut interest rates and banks reserve credit requirements in a bid to kickstart its wavering economy. Wall Street opened more than 2% higher, recouping some of its losses from the previous day's sell-off. That had been the worst in some 4 years. And Europe shares closed up on average 4.4%. It seems that what goes down goes up. And someone somewhere has probably made a lot of money in the process. Let's bring in our guest, Philippe du Fresnay, who assures me he is not the person who's made any money out of this. He's a McKinsey Executive Panel member and ESSEC Business School Fellow here in Paris. Philippe, of course, keen observer of all that goes on in China. I joked about someone making money and joked about it being you. I know it's not you, but someone somewhere probably has made some cash out of this, haven't they?
Definitely. What we're talking about here is a sign that China showed the world. China made a decision a few days ago to devaluate the yuan and see what would happen. Actually, the answer came in the form of a certain fear from the other stock exchanges. But is this fear really deserved? Taking in account the fact that China lost money, the stock exchange lost money, but money over a lot of money gained over a year. So was it really necessary to be that scared? That may be an answer from America to China, saying that you can't really go on playing like that without the world answering. You need to keep basing your relationship on trust. So you can't do whatever you want to do with your stock exchange anymore if you want to gain the power that you're claiming, especially considering the role that they want the yuan to play in the world.
This has been something, though, that the rest of the world has said to China before, but China has still decided to do exactly what it wanted to do. Is there something about the way China does business that means that this will be inevitable, this will happen again?
What I usually say is that the problem is coming from us.
It's our perception.
Yes, we always believe that China doesn't play by the rules, but the rules are the Western rules, because most of the financial institutions come from the West. Even the concept of democracy comes from Athens. So basically, China is playing by our rules, and sometimes they decide to do things their own way, especially when they start tampering with, or what we call tampering with, stock exchanges. You know that stock exchange in China is pretty new, and you know that it doesn't always answer by the same rules, and it doesn't even have the same basis. So based on that, sometimes we see things as being cheating, and it's actually not. We can anticipate things. Xi Jinping actually told us in 2013 everything that's happening right now is according to his roadmap.
So what you're saying makes me feel more and more like we're all just puppets being dangled by on the strings, being pulled by lots of extremely rich people around the world. But maybe that's just me being cynical. Let's keep it more on the lines of what the news angle is here, Philippe, which is, again, that's me telling me off. I should keep it with what we need to talk about. China and what happens next. Because obviously, when you see in China a fall of 8.5% in Shanghai, as we did on Monday, that's got to be bad news for China. So surely it isn't in China's interest, is it, that this should happen again?
Some economists, some Chinese economists not living in China, say that some people made money in the process, not the little people.
What, Chinese money? Chinese people?
Some intermediates. I mean, you can see it as some kind of pyramidal scheme. I mean, the people buying the stocks first sell them to the little shareholders who lost money, but the people in the middle didn't lose money.
You're describing it like a Ponzi scheme.
I didn't want to say the name, but you can't avoid talking about a Ponzi scheme when you're talking about a country with 1 billion people. That's the problem. It's always a Ponzi scheme because, for example, the Chinese stock exchange doesn't match the Chinese society right now. It's still untapped. There is a lot to tap in. So, for example, this loss of 8% you're talking about, all China needs to do is to let more people access the stock exchange and it will go back up. The problem is that it's still not based on liberal laws. And because the Chinese stock exchange is correlated to every other stock exchange, then one stock exchange not following the same rules as the other one is always source of problems.
So this needs to be not just an economic change or calibration or recalibration, it needs to be almost a political change and recalibration. Is that what you're saying?
We are reaching,
which is impossible, surely.
Yes, to some extent. We're reaching the limit here of the model of growth as we know it for China. But again, China is very well aware of that. They even told us what they plan to do in 2013. They say we're going to rebalance the growth, and they said we're going to switch to a domestic demand concept, which they're trying to do right now. Except that it's not that easy. So now the question is, what's going to happen? Are they going on switching to this domestic demand concept, but they still want to have the yuan play the role of a similar role to dollar?
And obviously the whole idea of devaluing the yuan was to help increase exports, wasn't it?
Well, some people say they wanted to see what would happen.
That sounds incredibly cavalier or callous.
Not really. I believe sometimes the Americans do the same, and the French would try to do the same had they the possibility to do so. It's just that we don't know where we're going in this case, so they're just experimenting. If they devaluate the yuan, they still have a couple of more months, or probably another year, going on the previous model of growth as they knew it, the growth based on exports, instead of switching to domestic demand. They can't really switch that fast to domestic demand. It needs to be a global scale change. I mean, every Chinese consumer needs to be aware that from now on, they will be the one fueling the Chinese growth. But the problem is that their salary is already, it's already paid taxes using the salary, and they already make a lot of savings for the future. So their salary can't really be the source of the next growth for China.
So the dilemma, how do you get the domestic market to buy shares when they've got no spare cash to do so? It is something we'll have to discuss another time. We need to leave it there, Philippe. Thank you, Philippe Fresnay. As ever, great to see you here on France 24. Thank you, as ever, for your analysis on China. Who knew the markets are so interesting, eh?